Hey everyone, welcome back. We're doing a deep dive today, and we're going to be looking at Barrick Gold.
Okay.
And specifically this recent Benzinga article about their performance and some of their financials.
Sounds good.
Yeah, we've got some charts from the World Gold Council too, just to kind of give us some context.
Great.
But yeah, I think the hook here that I found really interesting in this article is that gold production costs, they're not as simple as you might think.
Right.
Like, you can't just say, oh, the price of gold is this, so therefore...
It's getting up and selling it.
Yeah, exactly. There's a lot more that goes into it.
Absolutely.
And that's what we're going to be looking at today. So this deep dive is for anyone who's curious about, how much does it actually cost to get gold out of the ground and into our hands?
Yeah. And I think this is especially relevant given, Barrick's recent performance and some of the upcoming projects they have.
Right. Yeah, and that's actually the first thing I want to jump into with this article.
Okay.
So they missed their earnings expectations this past quarter.
Yeah, that was a bit of a surprise.
Yeah, especially because, like I said, gold prices, they've been, kind of trending upwards.
They have been?
So you would think that a big gold producer like Barrick would be doing really well.
Exactly. But what's interesting here is that even though gold prices are up, their production and sales were actually down.
Yeah, that's what the article said, and I was kind of trying to wrap my head around that.
Yeah, it seems counterintuitive, but there are a few factors at play here.
Okay, so like what kind of factors are we talking about?
Well, first of all, global demand can fluctuate.
Right.
Even if prices are rising, there might not be as many buyers at that particular moment.
Right, okay.
And then on the supply side, you have things like geopolitical events.
Oh, yeah.
Mining regulations. All of these things can impact how much gold is actually being produced.
Okay, that makes sense.
And then, of course, there's the cost of production itself, which plays a big role.
Yeah, and that's what I really wanted to focus on today, because this article mentioned something called all-in sustaining costs, or AISC.
Right. And it said that Barrick's AISC rose 20% this quarter to over $1,500 an ounce.
Wow. Yeah, that's a pretty significant jump.
It is. So can you break down for us what exactly is AISC and why is it so important?
Sure. So AISC, it's basically a comprehensive measure of all the costs associated with producing an ounce of gold.
Okay.
And it's not just the direct costs like digging and processing the ore.
Right. I was thinking there's got to be more to it than that.
Exactly. It also includes things like environmental protection.
Oh, okay.
Mine development exploration, even closure costs down the line.
Wow, so it's really taking into account the entire life cycle of a mine.
Exactly. It's a much more holistic view of the true cost of gold production.
Okay, so Barrick's AISC being over $1,500 an ounce, that sounds pretty high. Is that normal for the industry?
Well, it's definitely on the higher end.
Yeah.
There are a lot of factors that can influence a company's AISC.
Like what kind of factors?
Well, the type of mine they're operating.
Okay.
Where it's located, the grade of the ore, even their commitment to sustainable practices. Right, because those can all add to the expenses.
Exactly. And it looks like Barrick's AISC is higher than many of their peers, which raises some questions about their efficiency and cost management.
So even though gold prices are up, if their production costs are that high, it's eating into their potential profits.
Exactly. And that explains why they missed those earnings expectations.
Okay, so that makes sense. But then the article goes on to talk about how Barrick's CEO, Mark Bristow, he's highlighting these upcoming projects. They have like Reko Diq and the Lumwana Super Pit.
Yeah, those are some major projects.
They are. And he seems to be suggesting that these projects could help them improve their performance in the long run.
Right, and that's where it gets really interesting because these projects have the potential to be large scale and low cost.
So they could potentially bring down their AISC.
Exactly. If they can operate them efficiently, it could have a significant impact on their overall cost structure.
Okay, so it's like a balancing act. They're dealing with these high production costs right now, but they're investing in these new projects with the hope that it'll pay off later.
Exactly. It's a long-term strategy, and it's not without risk, but it's definitely something to watch.
It is, and I think this is where I start to get a little confused, because I understand the idea of investing in new projects to increase production.
Right.
But how does that actually lower their cost per ounce? Wouldn't they be spending a ton of money up front?
That's a great question, and it's a bit counterintuitive, but let me explain.
Okay, I'm all ears.
Yeah, so think of it this way. Imagine you have this old, clunky machine, right?
Okay.
And it produces just a few widgets every hour.
Okay.
And it costs a lot to keep it running.
Yeah, I got that picture in my head.
But then you invest in a new one.
Okay.
A really nice one.
Like state of the art.
Exactly. It's expensive up front,
Right.
but it pumps out tons of widgets every hour.
And probably breaks down less too.
Exactly. It's more efficient and lasts longer.
So in the long run, it's a better investment.
Exactly. And that's what Barrick is trying to do with these new projects.
Okay, so Reko Diq and Lumwana, they're like the new fancy machines.
Basically, they're designed to be more efficient, extract more gold with lower operating costs.
And that brings down their overall AISC.
Right. It's a long game for sure.
Yeah, but it makes sense if they can pull it off.
But there's something else in the article that caught my eye.
Okay, what's that?
Barrick also bought back millions of its own shares.
Oh yeah, I saw that too.
It's a move that's got some analysts scratching their heads.
Why is that?
Well, on one hand, it shows confidence.
Like they think their stock is going up.
Exactly. They believe in these new projects and their ability to boost profits.
So they're putting their money where their mouth is.
Right. But some people are asking, are they diverting funds?
Oh, like money that could be going into those new projects.
Exactly. Are they trying to please investors in the short term?
At the expense of their long-term goals.
It's a tough balancing act, for sure.
Yeah. So they got to keep the investors happy, but also make these big bets on the future.
And that's what makes this whole thing so interesting to watch.
Right? Like, will these new projects deliver? Or will those share buybacks come back to bite them?
It's a high-stakes game.
It is. And I think, for me at least, the big takeaway is that gold mining is more than just digging up gold.
It really is.
It's about strategy and risk and long-term planning.
And understanding the financial side of things?
Yeah, like what should people be paying attention to as this story unfolds?
I'd say keep a close eye on that AISC number.
Okay.
Yeah.
Yeah, because that tells us how efficient they are.
Exactly, and whether their strategy is working.
So if their AISC goes down, they're winning.
Well, it's a good sign at least.
But if it stays high or even goes up,
Then they might be in trouble.
got it. So the next time I see gold prices in the news, I'll be thinking about more than just the dollar value.
Right, you gotta look beyond the surface.
Like what goes into actually producing that ounce of gold.
Exactly, it's a complex process.
And it's fascinating to learn about.
It is, and I think this deep dive has highlighted that.
Like, don't just get caught up in the price of gold.
Right, look deeper into the factors driving those prices.
And AIC is one of those key factors.
Absolutely. It helps us understand if current prices are sustainable.
Because if production costs keep going up,
Then gold could become too expensive to mine,
and that could really impact supply and demand.
leading to even higher prices, potentially.
It's a delicate balance.
It is, and Barrick is right in the middle of it all.
With their high AISC and these huge new projects.
It's a microcosm of the challenges and opportunities in the gold market.
So for everyone listening, the next time you see a headline about gold prices,
Remember, there's a whole story behind those numbers,
don't just focus on the glitter. Dig a little deeper.
and you'll get a much better understanding of this amazing market.
Exactly. And who knows, you might even strike gold yourself with some new knowledge. It really makes you think about like the bigger picture, you know.
It does, yeah, and I think this deep dive into the Benzinga article, it shows us that investors, and really anyone who's interested in gold, like, we got to look beyond just the price,
So don't just get caught up in like, oh, shiny gold is expensive. Like, look deeper.
Exactly. Yeah, the cost of production, that AISC number, that's super important.
Yeah, that's a fundamental thing that we can't ignore.
It's like if you're trying to, figure out the value of like a handcrafted item or something,
Okay, yeah.
you wouldn't just look at the price tag.
Right. You'd want to